Hey guys, this is Money Mike, and if you are new to this channel, you might have not noticed that I'm on a ridiculous road to grow my portfolio from $28,000 to a $1 million. Just in past 7 months, I was able to find some really successful investments and just grow my portfolio from $28,000 to $41,000. To be exact, I invested $28,000. Since I was adding money, it's better to track results based on an average return. So my current return is 25%. And if I can keep up this return at the end of the year, I would have an annual return of 50%. So potentially I could double my money in just 2 years. Clearly, to deliver that 25% extra, I would have to add another 25% gain till the end of the year, which is not an easy task, especially when I expect this market to be on and off in upcoming days. I know that in this market, this would be almost impossible task, but I kept always looking for new opportunities. And because I have such an ambitious plan, I realized I cannot accept static market. It's time to move on and look somewhere else. This is where my focus went elsewhere, and right now I keep half of my portfolio in the growth stocks. This is where I originally made my 25% growth. And the second half I dedicate to SPAC stocks. Well, if you are wondering what are the SPACs, these are the companies that have the purpose to take companies public on the stock market. Before I continue, I would like to hit a record on this video, which is 100 likes. So please, if you like this video, give it a thumbs up right now, and also subscribe if you are curious whether I actually made it to 1 million or not. Finally, we can get to the main topic of this video, which is 3 cheap SPAC stocks you can buy right now. I will tell you why I actually bought $10,000 worth of these stocks. Before you do anything else, here is the most important part of this video. Just make sure that you don't skip this part. The last thing I want is to anyone just blindly lose money. What I'm going to do here is testing something that I was tracking for already 2 months. I am talking about SPAC life cycles. And if you don't know what it is, in a second there will be a brief explanation what it is. In the future, I will probably do a separate video about that. What I'm about to do is a very speculative play. Basically, I'm ignoring all the fundamentals of the stocks that I'm going to buy. And I'm betting that these stocks will behave accordingly to the statistics that I've gathered and their typical behavior. If you look at typical SPAC, their curve will look something like this. Of course, not every SPAC will have this curve, and that is also why not every trade is going to be successful. And this is why I diversified this strategy right now in the 3 SPACs that I'm buying right now. There is one more thing, and that is probably the main reasons why I actually consider to go for this type of investment. SPAC companies are very specific. One of the very interesting things about SPAC is that before they actually merge and they bring their company to IPO, their price of their stock can't actually drop under the $10 level, at least in theory. The reasons why SPAC are covered to stock dropping under the $10 level is that SPACs are basically a pile of money. To protect investors from a fraudulent acts and also from inflation, every SPAC has its majority of their money in the trust fund. And this money can be invested in any type of investment, but I would only assume for SPAC companies it has to be a very safe and also liquid investment. If I decide to invest in a SPAC stock and the SPAC would not find their company to take public, I would get my money back. And this is how SPAC companies works. There are more details to that, but it is the main thing to take away from this. Keep in mind that sometimes SPACs are able to decrease the amount of money that they have in a trust fund. This is why it is a good idea to keep track of money in their trust fund, because you might not get your full $10 back in some cases. And there is one more thing. This is the most important thing of them all. With this type of strategy, I will never allow staying invested and let the stock merge. Once I would let that stock merge, I would expose my $10 per stock bottom limit to a possibly $0 bottom. And I definitely don't want to do that. Just please do your own diligence or simply just watch these videos and watch what happens with my money. So let's go through the cheap SPAC stocks you can buy right now. And the number one is TRNE. There is no surprise. This company announced a merger with 3D printing technology provider Desktop Metal. Fundamentals actually do not matter with this strategy, so I'm going straight to the graph and to the performance of the stock, where the stock is. This stock is currently trading for $10.68 and was trading during the all-time high for $12.50. Now, this is how the 6 months graph looks like, and this is how I would assume, based on the historic data of SPAC companies, I assume that TRNE will trade in the future. There is a chance that this stock will go near to its all-time high, and that means back to its $12.50 once the merger will get closer and closer. So my target price is about $12.5, and based on that $10 minimum value of SPAC stock, my limit loss is $10. I'm risking over the next 2 months period 90 cents per stock, and I'm seeking a $1.6 profit. I bought this stock for $10.91, which means I'm risking 8% and seeking 15%. And this stock actually continues dropping, so right now it's even a better deal than I bought it into. I'm not going to add to my position since I'm just testing this strategy. Let's move to the next one, GMHI company that is merging with the Luminar. Again, fundamentals do not matter with this strategy. This stock is currently trading at $10.60 and was trading during the all-time high at $13.47. Now, this is how the 6-month graph looks like, and this is how I would assume, based on the historic data of SPAC companies, to trade in the future. I am seeking to retest its all-time high at $13.47 once the merger will get closer to actually the merger date. My limit loss based on the $10 minimum value of the SPAC stock is actually $10. I am risking over the 2 months period 60 cents per stock, and I'm seeking about $3 profit. I bought this stock for $10.55, which means I'm risking 5% and I'm seeking a 28% returns. And the last stock that I bought is the PIC SPAC company merging with XL Fleet. Again, I skip the fundamentals and go straight for the trading prices. This stock is currently trading for $10.60 and was trading during the all-time high at $13.31. Now, this is how the 6 months graph looks like, and this is how I would assume this company could trade in the future. There is a chance that this stock will go near its all-time high once the merger will get closer and closer. So my target price is around $13.31, and my limit loss based on the $10 minimum again is $10. I bought this stock for $10.6, and I'm risking over the 12 months period 60 cents per share, and I'm seeking a $2.7 profit, which means I'm risking 6% and I'm seeking 25% return. My total investments in all these 3 stocks is around $10,000. I expect to close my positions either profitable, in either as a loss, but it will be few weeks before the mergers. So I assume that we are talking about closing these positions in 1 or 2 months. Again, Guys, I'm testing this strategy. I do realize this is actually the worst time for SPACs. These stocks are crashing down, and you know, I still wanted to give it a shot. I still wanted to share this video. I'm not exposing myself too much, and you know, the realistic loss should be probably around 3 or 4%, while the potential is definitely much higher because it can be 10-20%. Thank you so much for watching this video, and you know, just make sure that you hit the like button and also subscribe, and I guess see you guys next time.